Have you ever wondered how companies protect themselves from unpredictable price swings? Whether it's a farmer trying to secure a good price for his crops or an airline shielding itself from skyrocketing fuel costs, the answer lies in hedging. And today, we're going to explore the critical role of hedgers in the futures market. If you're interested in learning how market participants manage risk and protect themselves from volatile prices, keep watching. And if you haven't yet, be sure to check out our video on speculators to understand this other vital market participant. So, what is a hedger? Hedgers are some of the most important players in the futures market. They're not looking to profit from price swings like speculators. Instead, they use futures contracts to manage and offset risk. Hedgers are often businesses or individuals directly involved with the physical commodity itself. Think of producers, wholesalers, manufacturers, and retailers. These market participants face risks from fluctuating commodity prices, exchange rates, and interest rates, all of which can significantly impact their bottom line. So, rather than leaving their financial future up to chance, they lock in prices and costs today through futures contracts. Hedgers come in different forms, each with distinct goals based on their exposure to price volatility. Here are the key types of hedgers. First is buy-side hedgers. These participants worry about rising prices. For instance, a company like an airline that relies on fuel might hedge to lock in today's lower prices and avoid higher future costs. By buying futures contracts, they protect themselves from the price increasing. Next is sell-side hedgers. These participants fear falling prices. For example, an oil producer may sell futures contracts to lock in current prices if they're concerned that oil prices could drop, which could reduce their revenue. This type of hedger ensures stable income despite potential downturns in the market. The last type of hedger is called a merchandiser. They are involved in both buying and selling commodities, and their risk comes from the difference between what they pay and what they receive. They use futures contracts to protect their profit margins by locking in the spread between their purchase price and their selling price. So, let's discuss an example of hedging. Now that you know the different types of hedgers, we can put this into context with a real-world example. Airlines are heavily dependent on fuel, and even small changes in the prices of crude oil can have a huge impact on their operating costs. To manage this risk, many airlines hedge by purchasing crude oil futures. Here's how it works. An airline might buy futures contracts today to lock in the price of oil for the next year. This way, if crude oil prices skyrocket, the airline is protected because they've secured a lower price through their futures contract. Even if prices drop, the peace of mind and stability the hedge provides allows the airline to avoid sudden cost spikes and plan their budget with confidence. For the airline, this means fewer surprises in fuel costs, which help them keep their ticket prices more consistent for their customers, regardless of what's happening in the oil market. Hedging is an integral part of many spaces. Beyond airlines, hedging is widely used across many industries. For instance, a food processing company might buy corn futures to secure stable prices for raw materials, or a construction firm could hedge against rising lumber costs to protect its future projects. No matter the industry, hedging through futures allows businesses to plan with confidence even in unpredictable market conditions. Hedgers are key players in the futures market, using contracts to stabilize their costs and protect themselves from volatility. Whether it's an airline securing fuel prices or manufacturers locking in material costs, hedging allows businesses to operate with greater certainty in an uncertain world. Thank you for watching. If you have any questions about hedging or futures trading, feel free to reach out at the link in the description. See you next time.